My fiance and I will be getting married soon, and it's very exciting. There are so many things to consider. For example, what venue will we book? Who are we inviting? And of course, where will we go on our honeymoon? One of the less exciting topics we have to consider, however, is taxes. More specifically, do we file separately or jointly? The good news is, I work at a personal finance website, so I can just ask a professional.
Hi, I'm Jeffrey Levine, Director of Advanced Planning for Buckingham Wealth Partners.
So Jeffrey, I'm sure you get this question a lot, but should married couples file jointly or separately?
In general, if the goal is to minimize taxes, typically the answer is you should probably be filing a joint return. Filing a joint return typically results in a lower tax liability in most instances because there are so many good things that get phased out as income exceeds certain limits, and oftentimes those limits are much lower for individuals who file married separate returns.
This kind of makes it seem like there aren't really any instances when filing separately makes sense, so why would any married couple choose to file separately?
And there are a few answers for this. The most common one is generally you don't trust your spouse. You see, when you file a joint tax return, you're signing a return together that says you're jointly liable for the taxes and the information that's on that return. There are also some tax reasons to file separate returns every now and then. For instance, sometimes an individual who files separate may receive a substantial premium tax credit under the Obamacare rules, and that can be beneficial.
Let's say one member of the couple earns significantly more than the other. Does that affect how they should file?
So one of the nice things about filing a joint tax return is that it essentially doubles your tax brackets, at least in the lower tax brackets. So sometimes, for instance, you may have one spouse who's going to work and earning the lion's share of the family's income, and another spouse who either has no earnings or low earnings. By filing a joint tax return, the earner actually benefits substantially by getting to kind of spread that income over really what would be double their own tax brackets. Now, at higher income tax levels, you don't see that quite as much. For instance, two individuals who each earn $1 million, well, they're at the highest brackets on their own and they're at the highest brackets together. But someone who, let's say, earns $100,000 on their own, well, they might be in a 24% bracket if they file single. But if they file a married joint return, they might actually find themselves in a 12% bracket if their spouse has little to no additional income.
In our case, I'm a salaried employee and she's a freelancer. Would those different earning methods matter when we file?
Whether your income comes from W-2 wages or your income comes from self-employment or business income, it really doesn't make a difference. We're generally concerned with the overall income that's going to be reported on a tax return. But of course, there are always exceptions. For instance, one spouse might be a high-earning W-2 employee, and another spouse might be a business owner who has a sole proprietorship and potentially would be eligible for a QBI or qualified business income tax deduction. Well, that high salary spouse, if they file together, might phase the business owner spouse out of being able to take a benefit for some of those profits of the business. Filing separately might allow them to do so. The good news, of course, is that today, most tax software, and certainly most professional tax software, essentially calculates two returns at the same time. So if spouses are worried, well, gee, are we paying the lowest amount? With a click of a button, a CPA or other tax professional can tell you what your tax liability would look like if you filed separate returns. Similarly, many private software programs or many home tax programs also provide that information on their own and will say, hey, we see that you're planning to file jointly, but if you filed separately, you might save X dollars on your return.
What happens if one person is audited, for example, after they file jointly? Are both people considered liable?
If you're audited, you're responsible for the full bill. If your spouse decides to pick up and fly to South America and hide from the IRS, you're still responsible for the entire balance of that bill. Now, that's the general rule. As always, there are exceptions. For instance, the IRS has something known as innocent spouse relief, but that is the exception to the rule. If there's a $10,000 debt, even if you get divorced the next year, you are both fully responsible for that $10,000 debt. If one of you can't pay it, the other one is responsible for paying the full balance. One of the most important things for couples to do when they are about to get married is to make sure they're open about their finances with one another. There shouldn't be any surprises. When you marry someone, you often step into everything in their lives, including these potential windfalls or potential problems. And so it's important to be upfront about that.